So on this Father's Day Sunday, I just saw an article come out, headline on Barron's that says investors are bracing for how the U.S. stock market futures will respond after Israel and Iran ramped up their aerial attacks earlier on Sunday, and after President Donald Trump suggested that it's possible that the U.S. could get involved in the conflict. Yesterday, I had seen something come out, I think it was on Zero Hedge, maybe CNBC, that said that Trump was out saying, look, as of right now, the U.S. Doesn't have any plans to get involved in the conflict, and the military was not involved in the conflict. Obviously, you guys probably all have your own perspective on that. Many could argue, I think, fairly, that the U.S. is already involved in this conflict. The bigger question is, how bad does this get? I wouldn't be surprised to see markets start to really digest a possible prolonged conflict after it's being ramped up over the weekend. Oil refineries being targeted now. So I wouldn't be surprised to see a lot of weakness in the markets tomorrow. I wouldn't be surprised to see the price of a barrel of oil jump up pretty considerably. I would not be surprised to see gold, an ounce of gold, to again put on big gains like we saw last week when this conflict unfolded. Gold could easily, just one person's perspective, not financial advice, not telling you to go buy gold, but gold could easily, top $3,500 an ounce, I believe, pretty quickly. And it's anybody's guess what the bond market will do, what the cryptocurrency markets will do. So far, if you guys watch the cryptocurrencies, Bitcoin initially on the news, Bitcoin dropped from like 109 down to about 103, and it's since held that level. It's trading about $105,500 right now per Bitcoin. So actually pretty resilient, okay, given what's going on right now, that the cryptocurrency markets trade 24/7. So let's see what the futures do. If you guys are in the stock market, hopefully you are hedged. Hopefully you saw Friday this coming, and you put on some sort of protection, if you will, for your portfolios. Those of you that are only long on stocks, you may have to hold on for a bit of a wild ride, and let's see how everything comes out this week. If the United States gets further committed, or let's say gets officially committed to backing Israel in this conflict, and if there would be any kind of formal military commitment, you can expect to see some more weakness. Okay, what's the Fed going to do about all this, right? And will this, let's say, speed up the process of the Federal Reserve coming in and cutting rates? So I will not belabor the point. It's Father's Day. Hope you guys, fathers out there, happy Father's Day. Back down in La Jolla, beautiful, finally sunny La Jolla, California. Hit the beach this afternoon with the family. A story I saw out of MoneyWise I want to share with you because it kind of, from today, and it kind of feeds on a theme I've been discussing on some of the more recent shows about the housing market and how the housing market is really starting to turn now, and how we're having a lot of, I did a show about 2 weeks ago how a lot of escrows are being canceled mid-escrow after contracts are signed because people are getting cold feet once they see the sticker shock of the actual mortgage, taxes, insurance. I did a story or a video, I think, end of last week that talked about how people are not truly recognizing the real cost of home ownership, and they're actually completing the purchases of these homes and then having sticker shock to find out what it takes to actually maintain the house, and all those, let's say, hidden expenses that you don't really maybe think about, especially if you're a first-time home buyer, before you jump into a market that still, from my perspective, is inflated. But let me share the story with you, which speaks to that point, which is that it's becoming a more of a buyer's market. Okay, Although the interest rates are still elevated, people are paying a lot more for mortgages now than they were just 2, 3 years ago. Okay. That aside, we've had a lot of sellers really digging in, holding, trying to get every last dollar, the whole greed factor, and that is starting to shift. So it says the tables are turning in the U.S. housing market. And this time, buyers are calling the shots. Listen to this. There are an estimated 1.9 million homes for sale across the country, but only about 1.5 million active home buyers. So what they're saying is this leaves a gap of nearly 500,000, the largest on record according to Redfin. The balance of power in the U.S. housing market has shifted towards the buyers, but a lot of sellers to this point have yet to see or accept the writing on the wall, said Redfin senior economist Assad Khan. Many are still holding out hope that their home is the exception and will fetch top dollar. And I'll editorialize there. Just wait until their neighbors start dumping the prices on their homes, and they will be forced to accept reality. Okay. I did a show, I think, middle of last week, where I shared, maybe it was the week before, where I shared that investors are already selling. Investors, I've already seen this coming. They've seen this shift. They're seeing rents down, and they're dumping properties. Okay. U.S. home prices were still up 3.9%, it says, year over year. In February, slight dip from January's 4.1% gain. But a growing supply of homes and easing mortgage rates are cooling the market, according to the S&P CoreLogic Case-Shiller Home Price Index. That's left some sellers, especially those who bought at the peak, trying to recoup their investment just as buyer demand starts to slow. With listings rising and buyers getting more selective, the big question is now the best time to sell. Leave your thoughts in comments. If you went through the last financial crisis, the housing bust, boom, and then bust, people that didn't get out early enough and see the writing on the wall, so to speak, got left holding the bag. And we're getting pretty close to that point that if you're a seller, you're not waking up to reality now. Every marketplace obviously is a little bit different, every state, every county, et cetera. But if you're not waking up to the reality of what's happening, it's soon going to be too late. Certainly too late to get reasonable dollars. And go back and do your research on what happened in 2009, 10, 7, 8, 9, and how much value these homes lost. People think it can never happen in the stock market, never happen to the housing market. Yeah, it can. It can. And it takes a long time for those values to build back up once it crashes. It says Redfin economists expect home prices to dip by almost 1% by the end of 2025. Demand's already down. Sales of existing homes fell 1.1% year over year in April, hitting a 6-month low. And again, guys might say, well, 1% by the end of the year, no big deal. But it's a cumulative effect, right? And once all the sellers wake up, hit the market, you're going to have, again, everybody running for the exit doors, and too many people trying to leave through one door, and a lot of people are going to lose a lot of money, a lot of value. Buying a home remains a major financial leap, with economic uncertainty fueled by tariffs, of course, layoffs, and shifting federal policies. Many would-be buyers are hitting pause on one of life's biggest purchases, and that's the topic that we shared a few days ago, which is the buyers are becoming more selective. They're getting scared. They're getting cold feet even once they're in escrow. They're making demands for more concessions, and they're sharpening their pencil. So if you're a buyer, be patient. If you're a seller, you better think about motivating quickly if you certainly are in a situation where you need to sell. Okay, if maybe you don't have a huge equity position, maybe it's not, maybe you're not retired and you can take that time. You're not too concerned. Let's say you own your home outright or what have you. So I won't go too long on the topic today. Just thought it was an interesting follow-up to what I've been covering for the last couple of weeks, more so on this channel. I'll leave it there today. Again, a happy Father's Day to the fathers. I hope you guys spend some quality time with family and loved ones. I'll be checking in throughout the week as we watch these markets unfold and this turmoil, not only geopolitical turmoil with this Iran and Israel situation, but I'm looking through, scrolling through headlines from all of the rallies in the United States that took place in various cities throughout the country over this weekend. Violence, there were deaths. If you guys aren't following this, shootings. It's just really, really ugly and very disheartening, but it's a reality of where things are right now in the country. And that means that all of us need to be paying much more astute attention and taking every possible measure that we can to get ourselves, let's say, more fortified, financially fortified. How about health and fitness fortified, paying off debt, doing all those things that we often discuss on this channel, because for many, the rough times are going to get rougher. All right. I'll leave it there today. Thanks again for watching. Appreciate you guys hitting that like button for me. If you're not subscribed, it is a free, easy way for you to support this growing channel, and I really do appreciate that. So hit the subscribe button. Talk to you soon. Bye.